Good morning and welcome to another edition of Trade Talks. My name is Lyanne Alfaro, and while Jill is at TD Ameritrade today, joining me is Chris Englebert, Managing Director at Beirne Wealth Management. Thank you so much for joining us.
Thanks.
So you're here for our monthly RIA strategy update. Thank you for joining us, and it's just a great opportunity to talk about this. TD Ameritrade was here talking about RIAs and the future generation in the workforce. So tell us a little bit, to kick it off, what retail clients should do about social media when someone unfortunately does pass.
Right, it's something that people haven't really thought about, but mom and dad are on Facebook, and so it becomes what happens, obviously, if mom and dad pass. I've had comments made to me by people like, oh, wow, we didn't know, that so-and-so died. So what we're trying to tell our clients is that social media and the social media accounts are just as important as everything else. And what you should really do is keep your passwords for Facebook or Twitter, along with your wills and other important documents, because it's one of those things that at some point somebody's going to have to close those accounts down.
Okay. And could you tell us a little bit about what happens after? So what happens after, in addition to having the passwords, what do you do in terms of messaging? Yeah,
well, one of the things that we try to do is we try to say, pick somebody in the family, maybe, unfortunately, somebody that's in charge of your estate. Maybe it's the same person, a son or daughter. That would be the person that would probably post a tasteful message that, hey, mom and dad, or dad passed away, and we just want to let you know that we're going to be closing down their social media accounts. Because again, it's kind of eerie. I've had people say to me, we've gotten a message from somebody from beyond that we knew had passed away. And a lot of times you have, quote, Facebook friends that don't really keep up on your day-to-day life, so they may miss when something happens. So it's very important to obviously let people know. Some of these social media accounts stay open as long as 6 months to a year, even if there's no activity with them, and it depends upon the social media account.
Wow. Now, tell us about the next generation of young advisors. How do you hire for your RIA shop?
Yeah, it's a good point. It's something that the industry is struggling with. Unfortunately, the average age of most financial advisors are very close to my age. And so what we're trying to do is we're trying to attract the next generation. And one of the things that we think is very important is that you as a firm, for example, Beirne Wealth, you need to have a social media presence. So, for example, I interviewed a young advisor just the other day, and he'd checked me out completely on LinkedIn and on my Twitter page to kind of find out what's going on with Beirne Wealth, who are these people, and what are they trying to do. So we think it's important to have a social media presence if you're going to attract the next generation.
And that seems certainly crucial as part of what you do. So for other people looking to hire the next generation of RIAs, in addition to social media, what other tips might you offer?
Well, I think you have to be very clear. I try to talk to these young advisors and say you have a great opportunity working at an RIA firm, because typically most of the firms are smaller in size, so you're going to have a much bigger impact. My true belief is to give the young advisors as much as they can handle. They may be doing some Excel spreadsheets one day, but the next day they might be in a client meeting or a client presentation talking about what's going on with a high net worth client's account. So we think it's very important that they understand what their role is going to be at the firm, and it's very important that you cover all of the important points such as compensation as well. And one of the things that we found, and I think this is exciting, is that young advisors are looking to be trained. They usually are obviously fresh out of college. They've done a lot of studying, and what they want, the question I get answered or asked the most when we're interviewing is, what kind of training programs do you have? And what we like to do is that there's a multitude of conferences that I attend, and rather than having me attend those, we'd have a young advisor attend them, take notes, write up, and let us know what's going on at that particular conference. So we really think that that appeals to the young advisor in the future.
Definitely. No better teaching experience than being there yourself.
Literally on the job.
Literally on the job. So let's turn to market update and talk about several indices here. So let's turn to the charts to get your fundamental and technical perspective. Started with the S&P 500, which is trying to challenge January highs with a summer rally.
Yeah, obviously January 26th, the S&P 500 peaked so far for the year. It had a pretty good correction. And now the last several months, May, June, and into July, we're getting a summer rally. So it looks like it's trying to go back to new highs, but unfortunately we think there's some headwinds coming the next couple of months. Obviously there's some key stocks in the S&P 500 that are going to be reporting earnings the next couple of weeks, and those are really going to become important as far as whether or not the S&P 500 can make a new high for this year.
Now turning to the Nasdaq Composite, we saw a nice rally in July, but it's been under some pressure.
Yeah, probably what ended up happening, it really is becoming apparent, is that some of the social media stocks got ahead of themselves. There was a tremendous amount of enthusiasm. There's been a lot of news reported. The Nasdaq, if you really look at a long-term chart, has gone almost vertical. It's not unusual to have it take a rest, and we think that's what's going to happen the next couple of months.
Next, the Russell 2000, where we saw a reversal.
Yeah, very important. In the month of May, we saw a lot of strength in the Russell 2000, probably due to the fact that those stocks are going to be impacted the most by the tax cuts that were passed earlier in the year. And so the Russell 2000 had a real nice May, June, and July. But again, there's a lot of technology, social media-oriented stocks, and the Russell seems to be suffering the same problem as what the Nasdaq is in the short term.
And now in the 10-year, we're seeing a kind of sideways pattern.
Yeah, interestingly enough, there was a call for higher rates. The 10-year peaked earlier in the year, but since that time, the 10-year has really been going sideways. And if you had to ask me, it seems to be a very strong pattern, rallying right around, the 295 to maybe 3% level, and really not doing too much. It looks it's almost like the 10-year is waiting to see what the second half of the year is going to be like with regards to the economy.
And finally, as we wrap up here with crude oil, which took a little bit of a breather, do you think it can go back to being higher? Yeah,
if you look at this chart, we show a chart since back to June, and the real story has been, again, the relenting move upwards as far as the price of oil. This week we're seeing another continuous move higher. There's been a few kind of sharp pullbacks, but really they've been no more than a 5 to 10% pullback. We think oil is the big story for this year and could obviously looks to be going much higher.
Great. Well, thank you so much for joining us, Chris.
Thanks for having me.
Everyone, this has been Chris Englebert, Managing Director at Beirne Wealth Management. Thank you for joining us on another episode of Trade Talks, and stay tuned. We have more coming.